Good day. My name is Criseline Bernabe and I am here to discuss to you about cash and cash equivalents in intermediate accounting. So, let's begin.
Cash and cash equivalents in intermediate accounting, Chapter 1. There are three main objectives in this video. 1 is to identify cash and cash equivalents. 2 is to know what items are included in cash and cash equivalents. And 3 is to know what are not included in cash and cash equivalents. So what is cash? From the point of view of a layman, cash simply means money, and money is the standard medium of exchange in business transactions. From an accounting perspective, cash is the most liquid asset and is vital for the solvency of a company. It includes more than just the physical traditional bills and coins. It includes any other currency as well as undeposited checks, amounts in a current amount. There are three items included in cash, namely cash on hand, cash in bank, and cash fund. Cash on hand includes undeposited cash collections and other cash items awaiting deposit, such as customers' checks, cashiers or managers' checks, travelers' checks, bank drafts, and money orders. Cash in bank includes demand deposit or checking account and saving deposit, which are unrestricted as to withdrawal. Lastly, cash fund is set aside for current purposes such as petty cash fund, payroll fund, and dividend fund. Now, what is the difference between cash and cash equivalents? According to the Philippine Accounting Standard 7, Paragraph 6, cash equivalents is defined as short-term and highly liquid investments that are readily convertible into cash and so near their maturity that they present insignificant risk of changes in value because of changes in interest rates. Common examples of cash equivalents includes commercial paper, treasury bills, short-term government bonds, marketable securities, and money market holdings. But, take note, an item is considered as cash equivalents if the item is short-term and they mature in less than 3 months. If they mature in more than 3 months, they will be classified as other investments. The caption cash and cash equivalents should be shown in the first line item under current assets. This caption includes all cash items such as cash on hand, cash in bank, petty cash fund, and cash equivalents, which are unrestricted in use for current operations. Details comprising the cash and cash equivalents should be disclosed in the notes to financial statements. There are also items that are not included in cash and cash equivalents, and these are bank overdraft, compensating balance, undelivered or unreleased check, post-dated check, and lastly, stale or long outstanding check. A bank overdraft is an extension of credit from a lending institution that is granted when an account reaches zero. A bank account has a credit balance and it is said to be overdraft. A bank overdraft is classified as a current liability and should not be offset against other bank accounts with debit balances. A compensating balance generally takes the form of minimum checking or demand deposit account balance that must be maintained in connection with a borrowing arrangement with the bank. There are two classifications of compensating balance. If the deposit is not legally restricted as to withdrawal by the borrower because of an informal compensating balance agreement, the compensating balance is part of cash. But, if the deposit is legally restricted because of a formal compensating balance agreement, the compensating balance is not classified as cash and cash equivalents. Undelivered or unreleased check is one that is merely drawn and recorded but not given to the payee before the end of reporting period. A post-dated check received is a check made and received from the maker, but it bears a date subsequent to the end of reporting period. And lastly, a stale check or check long outstanding received is a check not encashed from the maker within a relatively long period of time. So, in conclusion, cash and cash equivalents refers to the line item on the balance under current assets that reports the value of a company's assets that are cash or can be converted into cash immediately. And the items included in cash are cash on hand, cash in bank, and cash fund, while cash equivalents includes commercial paper, treasury bills, short-term government bonds, marketable securities, and money market holdings that should be acquired 3 months before maturity. And lastly, items not included in cash and cash equivalents are bank overdraft, compensating balance which are legally restricted, undelivered or unreleased check, post-dated check received, and stale check or check long outstanding received.
So, that is it for the video, and I hope you learned a lot about cash and cash equivalents. Thank you and have a good day.